There's a price for everything, at least in the stock market. Sooner or later, beaten down stocks become investable again, as long as the underlying company isn't going out of business and the balance sheet is good. Just look at the incredible action today in Bed Bath & Beyond. For years, this home goods chain was an absolute dog. Thanks to ferocious competition from Amazon and better-run brick-and-mortar rivals, especially Target, it's hemorrhaged market share. Companies seemed aimless, wasting billions of dollars on useless buybacks as management repeatedly failed to commit to a real turnaround strategy. They know nothing! Bed Bath's the poster child for how feckless executives can drive a previously good business right into the ground. Stock peaked around $80 a few years ago. Yesterday, it closed at $9 and change. But here's a shocker. The company's still profitable. It's got more than 1,500 stores and an okay balance sheet. Bed Bath just needed direction. And that's what it got last night when the board poached none other than Target's chief merchandising officer, Mark Tritton, and named him the new CEO. What a get! In response, the stock surged more than 21% today. I think that move actually made perfect sense. Bed Bath had been beaten down to the point where it was too cheap to ignore. The stock was like a coiled spring, especially given the humongous short position going into the session. So is this thing finally bottomed? We need to be careful here. People have lost fortunes speculating on a Bed Bath & Beyond turnaround. Now, I've been warning you away from this stock for ages. But you know what? I think it's time to go positive on this one. Okay, so you missed a couple of smackers today. Listen to me. Bed Bath's been punished enough. Now that they've got a competent CEO, better than that, a great CEO coming in, I'm thinking the stock has not just a little more, but a lot more upside. What makes you say that? Okay, back in April, a trio of activist hedge funds got involved here. Legion Partners, Miscellum Advisors, and Ancora Advisors. I know Miscellum, John Dusk, I've known him for 30 years. He spoke at my corporate governance conference in the spring about the need to change things, and these guys had bold plans to turn things around and a strong track record. But at the same time, I told you Bed Bath was still too toxic to touch no matter what. Even when the activists effectively won their proxy contest in May, ousting the old co-chairman and then now former CEO, Steve Tamaris, I still said, no. The stock is a sell. Sure enough, the stock spiked up to $19 and change when those activists got involved, and then it proceeded to lose more than half its value. Even though there was some reason to expect a turn, Bed Bath reported a hideous quarter in June, and investors started worrying that they might get slammed again by the trade war. By mid-August, the stock had plunged to $7 and change. But at those levels, it was selling for just 5 times earnings, and that is ridiculously cheap. Remember, this company's profitable. It's cheap unless you're convinced the actual earnings are going to be much, much worse going forward. And, man, even in the low double digits where it is today, I got to tell you, this is a very different story. Right now, Bed Bath sells for 6.4 times this year's earnings. That's an incredible bargain if you think the company will come even close to making the numbers. At these levels, you have to stop fretting about what can go wrong. You got to start imagining about what can go right. And it's frankly not that hard to imagine. Not anymore. In the last couple of weeks, Bed Bath had 2 major positive developments that have been completely overlooked. Makes me feel more confident about recommending this as a special situation. Now, you already knew, I've told you about the new CEO they picked last night. I'm going to give you more on him in a minute. Before then, though, Bed Bath had already started to turn, okay? Stock didn't lie here. See, last Wednesday, the company reported a seemingly hideous quarter. I mean, it looked very ugly on the surface. However, when you drill down, I felt there were a number of positives. While Bed Bath's revenue came in weaker than expected, and the same-store sales were absolutely disastrous, shrinking by 6.7%, which is just awful. Sell. When the analysts only expected a 5.4% decline, there was a major silver lining. The company earned 34 cents a share. That was substantially better than the 27 cents that Wall Street was looking for. Buy. Guidance similar. Management cut their full-year earnings forecast. Bad. But the numbers were still substantially better than what the analysts were modeling. Good. The bulls were hoping Bed Bath would announce their new CEO, though, and when that didn't happen, well, the stock got hammered. People just said, you know what? Nobody wants this job. Which brings us to last night. Bed Bath desperately needed a permanent CEO that investors can trust. You know what? I can't actually imagine a better pick than Mark Tritton, Target's chief merchandising officer, who takes over on November 4th. Target's one of the few retailers that's been able to thrive in this environment. Well, that's why I made it part of my acronym called WATCH, which is Walmart, Amazon, Target, Costco, and Home Depot. Even though it's the smallest of these companies by far, if you look at their stocks, you will know that they've just rallied throughout this whole period of turmoil. Other than Amazon, Target's been Bed Bath's worst enemy. But now they've got one of Target's best executives running the show. What's Tritton done at Target? He was a major player in rolling out their highly successful omni-channel operation. That's huge. He turned around Target's private label business, fabulous. Oh, and he's been responsible for keeping Target's suppliers in line. Major reason why they haven't really been hurt by the tariffs. Once he takes over next month, Tritton needs to do the same thing for Bed Bath, while also improving their merchandise assortments and cleaning up the capital structure. There's a reason why he was shortlisted from day one. Bed Bath wants to make itself relevant again, and he's the guy to do it. Why am I so confident? Because we've learned that Tritton wanted to be paid in stock as a key part of his compensation package, rather than getting a big signing bonus. He's betting on himself. I want to bet with him. And look, Tritton's not crazy. He never would have taken this job if he believed that Bed Bath was a lost cause. I think the fundamentals are better than most people seem to appreciate. There were some genuine positives in that last quarter. On the conference call, Bed Bath pointed out that they've saved hundreds of millions of dollars by improving their Byzantine, mostly American sourcing model. That's why I'm not worried about the tariffs. The company's already fixing the ridiculously inefficient supply chain, and they won't have to raise prices to you if the tariffs ramp next week. They're also planning to sell off some of these smaller businesses that have really cluttered the joint, and they're going to monetize some of the real estate. Management wouldn't put a specific number on it, but I bet it could be somewhere in the neighborhood of $1 billion. That's a big deal. Why? Because Bed Bath's only a $1.5 billion company. Oh, and they already have about $1 billion of cash in the balance sheet. Best of all, it appears that Bed Bath's sales for the current quarter have improved versus the quarter they just reported. Company only needs to stem the bleeding a little to make the numbers. We're talking down 4% same-store sales rather than down 6%. Plus, they took a $200 million charge for inventory, and they're planning to remove $350 million of inventory, stale inventory, from their stores before the holidays. That means the stores will be clean. Boy, does that ever make a big difference. Very few clearance items dragging down their gross margins. I'm expecting a major pickup in full-price sales. And look, even if the estimates need to be cut, even if they can only, say, make $1.50 instead of the $2 people are looking for, the stock would still be absurdly cheap at 8 times earnings. Bottom line here, and this is really important, people, Bed Bath is back. They finally brought in a hyper-competent CEO. And even after the stock's monster run, 21% today, I think it's got a lot more upside. In a major change for me and Mad Money, I would buy some of this stock here. And then if you get a pullback, you know what? Turnarounds do take a little time. I would definitely buy more. BBBY. Who'd have thunk it? Stick with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.